Hello, everyone. Welcome to our inaugural GoldSpring Reflections, where we're going to take a reaction of some important news events that are happening and share our quick thoughts with you in a short time frame. So today we want to focus on IATA's press release of yesterday, which announced that travel is coming back faster than we even expected. So the upgraded IATA forecast indicated that all industry-wide profits will be back by 2023, again, updated forecast, except for North America, which is ahead, and that should be 2022. Passenger demand is at 83% of 2019. So we're seeing a huge influx of demand, and yet we're struggling with some limited supply. We're struggling with pilot shortages, and we're struggling with labor shortages in hotels. So just want to have a quick discussion around that. Cindy, this landscape is changing very quickly. Tell us what your thoughts are related to all of this demand and supply issue.
Absolutely, Will. All of us at GoldSpring have had a lot of discussions around the labor shortages and what's impacting our ecosystem in the market. And we all agree, travel will not be a pleasant experience this summer. This past Sunday, 1,200 flights were canceled. And unfortunately, this is not a unique scenario. We are seeing reports every day on flight cancels and flight delays. The majority related to staffing shortages such as pilot shortages, gate agents, flight attendants, and these staffing shortages are across the entire industry ecosystem. One resort hotel typically employed 1,800 staff. Conversations with them, they've only been able to hire back 180 following the pandemic. It's a real challenge, and their performance is not there, and they admit it. So performance metrics and communications with your supplier partners, I would say, is critical.
Well, Cindy, that's we have had a lot of conversations on that, but the extension building out from those thoughts, of course, as the return to travel has finally come back, and of course, we've spent months and months and months anticipating this. Our projections have always, reality's always fallen a little behind our projections. Then it's come back, and it's come back with a force, probably since March we can peg it to. And of course, what happens is all this means that we can't provide the supply to meet the sudden surge in demand. And that, of course, means that prices are going to go up. As well as that, we've got all these other inflationary pressures. We've got fuel costs and labor costs going up as well. Interesting, Will, your point that the airlines are in North America anyway may be profitable this year, but they're going to need to be. Just a reminder, they lost so much money in 2020 and 2021. They literally wiped out all the profits from the previous 5 years, and those profits represented all the historical profits of the aviation industry for 40 years. So they're behind the eight ball, and they're going to continue to need to make money. So don't expect those prices to be coming down very, very soon. What do you think about that, Cindy?
Yeah, it's really interesting, that point. What I didn't mention is the same hotel resort that I was referring to. They tried to hire back additional employees. They doubled the rate of pay. Do you know they had not one taker beyond that 180? Think about that, double the pay and the impact on pricing overall, Neil.
Indeed. I mean, just thinking that it's going to be so hard for suppliers across the board to attract people back into the industry, when we've since been essentially dormant for 2 years and people have moved on, reskilled, and unfortunately got a lot of fortunately, if you want to look at it that way, got gainful employment outside the travel industry. So we're going to have to work hard. We're seeing the TMCs with offering some extreme incentives to try and get booking agents back in there. But just again on my issue of the pricing, what does this mean for buyers in the airspace? Those top tier inventory, that's what the buyers are going to be. The travelers are going to be looking at now. It's going to be those last minute fares, the highest fares. Now that of course is where you get the highest discounts. So some buyers are going to like this because they're going to see their contract values go up. And I think another interesting byproduct of this is that particularly the fuel costs going up, is that we're going to see sustainable aviation fuel be more economically viable as compared to regular fuel. So maybe we'll see an acceleration there. And finally, to your point, Cindy, you know, for travelers, got to sign up for those loyalty programs, and buyers, you've got to leverage the value components, because with all these flight cancellations, there's going to be a lot of lines, a lot of waiting in lines, and getting that those corporate recognition via the loyalty programs to rebooking priority, boarding priority, those kind of things are going to be very, very important for travelers. Will?
Well said. We're dealing with a combination of a price increase and at a service decrement. So we're going to have to manage both of those as we move forward. Well, hope you enjoyed our very first GoldSpring Reflections. Join us again for a deeper dive into the impacts of airline and what happens downline for the managed travel space. And just as this rock was sort of dropped in the ocean of airline and IATA projections, increased revised projections upward, it creates a ripple effect out. So thanks again for joining us for GoldSpring Reflections. We look forward to seeing you next time.